The global financial system is facing a crisis. Following the economic fallout caused by COVID-19, central banks and governments around the world are working together to bail out their domestic economies by increasing their fiscal deficits and printing mountains of money. We don't have to look much further than the M2 money supply to see the scale of these operations, as the M2 money supply in the United States increased by 20% since the beginning of the year in January. Now, this is an effective short-term solution, but it creates a lot of problems in the long run. And we don't have to look much further than Venezuela or Argentina to see the potential severity of the effects of expansionary monetary policy. Now, this isn't to say that hyperinflation is going to seep into the US economy, as most economists and business leaders agree that hyperinflation is not likely going to be seeping into the US economy. But a lot agree that there is likely going to be some elevated level of inflation that we're going to have to contend with in the future. So what is the best hedge for inflation? Should you be buying assets that produce cash flows in excess of the expected inflation rate, like Google or Facebook? Or should you be buying scarce assets like precious metals? That's what we're going to be talking about in this video as I go over what I believe is going to be the best inflation hedge for the next decade. So let's get into it. Now, following the Federal Reserve's announcement back in March that they're going to be once again conducting quantitative easing, a lot of investors piled into gold and silver as hedges against inflation. But the best hedge, and one that is representing an increasing portion of my portfolio, is Bitcoin. Now, I actually started my trading and investing career with Bitcoin back in 2017, and at the time I kind of just viewed it as a speculative asset that was fun to trade because it was so volatile. But as I spent more time learning about the asset, I realized just how revolutionary it really was. Now, I'm going to be explaining in 3 reasons why I, as a value investor, believe that Bitcoin is going to be the best inflation hedge for the next decade, and why it's an asset that you don't want to be missing out on. The first reason is that Bitcoin solves the problem of scarcity. It is a decentralized, programmably scarce digital asset. Now, let's unpack what those terms mean because they are fundamental to understanding why Bitcoin is so valuable. Let's start with the first one, which is decentralized. There are 2 broad types of scarcity: centralized scarcity and decentralized scarcity. With centralized scarcity, there is a central authority in control of the supply of a specific asset. Some examples of this are the fiat currency system or something like a designer bag. The problem with this form of scarcity is that you have to place a lot of trust in that central authority to not debase the value of that asset by increasing the supply excessively. And unfortunately, generally what happens is that central authority does not act in the best interest of the holder of that asset, and they eventually debase the value of that asset. And we've seen this happen over time with fiat currencies, as the most dominant fiat currencies in history, the British pound and the US dollar, have lost 99.5% and 90% of their value since their inception, respectively. This tells us that there is a problem with centralized scarcity. This is in comparison with decentralized scarcity, where there is no central authority in control of the supply of a specific asset. And some examples of that are with precious metals. For example, with gold, the supply of gold is determined by natural market forces. If the price of gold is high enough to warrant mining activities, people will go out and mine gold because they know that they can make a profit. But eventually what happens is that people mine so much gold that the supply increases and the value of that gold drops. When this happens, it makes mining activities not profitable, so people cut down on the amount of supply that they're creating for gold until the demand catches up to that supply, pushes the price of gold back up, and people once again find it worthwhile to conduct mining activities. So this way the supply of gold is stable and decentralized and is not controlled by any centralized authority. This is what has made gold such a great store of value over time, as it's been used as a store of value and as a currency for thousands of years. Now, Bitcoin is the same. There is no central authority in control of the supply of Bitcoins. This means that you don't have to worry about a central authority debasing the value of your investment in Bitcoin because there is nobody in control of the supply of Bitcoin. Bitcoin is a programmably scarce asset. This means that its supply is determined by an algorithm. And that algorithm was designed to mimic the supply curve of gold over time as Bitcoin becomes more challenging and more costly to mine as time goes on. This means that you can be 100% confident that your investment in Bitcoin is not going to be debased by an unwarranted increase in the supply. And actually, we know exactly what the supply curve of Bitcoin is going to look like because the code for Bitcoin is open source and anybody can go and look at it. Currently today, there are 18 million Bitcoins in circulation, and there is a hard cap on the amount of Bitcoins that are ever going to be in circulation at 21 million Bitcoins. and it is expected that we're going to hit that supply cap of 21 million in the year 2140. So it's going to take a long time for that additional 3 million Bitcoins to come into circulation, which means that you can be confident that your investment in Bitcoin is not going to be debased. This is arguably the most important aspect of Bitcoin to understand and explains why it is such a valuable asset. It is a good inflation hedge for the same reason that gold is, except it's an even more scarce asset than gold because the amount of Bitcoin coming onto the market in the future is expected to be less than the amount of gold that's going to be coming out onto the market. But why would you want to own Bitcoin over an asset that produces cash flows in excess of the expected inflation rate, something like Google or Facebook? That leads us into the second reason, and that is that the adoption rates of Bitcoin are rising and rising fast, and regulations are moving in the right direction to allow for that adoption to happen. Just in the last week, we've seen two incredible pieces of news for Bitcoin. The first being that Stan Druckenmiller, the billionaire hedge fund manager, stated that he believed that his Bitcoin investment is going to outperform that of his gold investment. And the second being that PayPal removed the waitlist for its new crypto service, which allows for consumers to conduct transactions in Bitcoin and other cryptocurrencies. And prior to that, we saw Square make a $50 million investment in Bitcoin, and we saw Michael Saylor, the CEO of MicroStrategy, invest 90% of the company's treasury into Bitcoin, which was a $425 million investment. So adoption is rising, and it's rising by very prominent figures in the investment industry, as well as in the technology industry. And when you start seeing these big names make investments in Bitcoin, like we've seen Paul Tudor Jones, Michael Saylor, and Stan Druckenmiller make, naturally what a lot of people are going to do is start to follow their lead, and adoption will continue to rise, pushing the demand up for Bitcoin, subsequently increasing the price. This is a classic example of a supply and demand imbalance, with demand outpacing that of the supply, which is why Bitcoin makes such a great inflation hedge and why it is likely going to continue to rise in value over time. Now, the third and final reason why Bitcoin makes such a great investment is that it is undervalued. And I know that's a little bit of a weird thing for me to say, that an asset like Bitcoin is undervalued, but let me explain. We've determined that Bitcoin possesses many of the similar qualities to gold that make it such a good store of value, and we determined that Bitcoin is more scarce of an asset than gold, making it an even better store of value over the long term. But on top of this, Bitcoin also has many more use cases than gold. Gold isn't very effective as a form of payment because it is extremely heavy and costly to transport gold. If you wanted to conduct a large cross-border transaction with gold, you'd have to actually load that gold up onto a plane, ship it over to another country, and deal with all the regulations that come with that. It would take a long time and be extremely costly, and that is why gold is not really used for large cross-border transactions. The current system that we use is a SWIFT system, which is also extremely costly because it requires multiple banks and clearinghouses to approve any transaction. All of these banks and clearinghouses take a percentage of the transaction, which makes it extremely costly to do large cross-border transactions. Bitcoin circumvents all of those third parties because it is a peer-to-peer network that allows you to send a large sum of money through the Bitcoin network for an extremely low cost, and it also happens almost instantly. Now, Bitcoin's market capitalization is just $250 billion compared to gold's $10 trillion. We've already determined that Bitcoin is just as good of a store of value as gold, so it's conceivable that Bitcoin's value is going to reach gold's market capitalization of 10 trillion because it is just as good of a store of value. And on top of that, we can also make an assumption that Bitcoin has more use cases, making it more valuable than that of gold. So it's also conceivable that Bitcoin's valuation is going to exceed that of gold in the long run. So right now, with Bitcoin's market capitalization being just 2.5% of that of gold, it means that its upside to reach gold is a 40x return on your investment. And this is why I believe Bitcoin is the best inflation hedge on the market today, and why you should not be missing out on investing in this revolutionary asset class. That does it for this video. I hope you guys enjoyed and learned something new. As always, I'm not a financial advisor, but I do hope you enjoyed, and I look forward to seeing you in my next video. Have a great week.